This has been one of the wildest days on Wall Street in recent memory. Keith Bliss, Cuttone Co, great to see you here.
Thank you.
So it all started today with a huge sell-off because this jobs number we got out was just mind-blowing how bad it was.
Well, that's right, and it's interesting, the difference in the jobs number, so the actual jobs added was very weak and very poor, 38,000 jobs, but then the unemployment rate dropped, and that's confusing to a lot of people about why that can happen. And it's really two different surveys that the Bureau of Labor Statistics conducts to find those numbers. And the unemployment rate dropped, not for the good reasons that you want it to, because we added so many jobs. It dropped because the labor participation rate went down again. So it was weak across the board, a real dud, landed with a thud here on Wall Street, and you're seeing that in the trade today.
We are seeing stocks come back from lows, and we have these days with extreme volatility, but what's the mindset? How is the market reading that number? Because you could read it either way if you start bringing in the Fed.
Well, I think what we've seen in the past few months with the Fed is we've gotten beyond the bad news is good news for the equity market. Now we've gotten to the point where we're actually analyzing the macro data and taking it for what it means inside of the economy and inside of the market. And the number that we saw today is not a good number for growth inside of the U.S. economy or the global economy writ large. And what that means is when you talk about asset prices, particularly cash equities, that's going to impact cash equities, because if we don't have the proper growth, then companies can't sell more stuff, and therefore they can't increase the value of the holdings for the shareholders, and therefore equity prices will be hurt as a result.
What do you expect stocks to do now? We have Janet Yellen speaking Monday, so I would think the markets might be on edge a little bit until we hear what she has to say and see if there's any sort of clarity.
There were really two seminal events in June that we were looking forward to. One has been on the calendar for years, and the other one just created this year, and those two are the FOMC meeting, which will conclude on June 15th. And then the British referendum vote on EU inclusion or EU exclusion on June 23rd. I think most everybody was comfortable with the fact that nothing was going to happen at the FOMC meeting in June, regardless of this jobs number. I always thought that there was too much risk in the global economy, especially with the Brexit vote, the so-called Brexit vote. So we're really looking forward to that Brexit vote. That has now taken on significant importance. As it relates to Janet Yellen's speech, I think she's going to come out. She'll certainly make some comments about the job market, the labor market. She'll probably does what she always does. The headline numbers meaningless to them. They start looking at wage gains and other types of data underneath that. But look for her to have some more soothing, dovish tones about any kind of rate increase in June. I think that's completely off the table now. That's what I'm really going to be looking for to hear if she does say that with definition.
If that's on the table and we still have Brexit ahead, what do you see happening with stocks in the next couple of weeks? Will people stay defensive in terms of what they're interested in buying?
If there is any kind of movement, clearly we'll see some rotation in defensive names. You've already seen that today. There's three sectors that are up in this week trade today, and that is consumer staples, utilities, the classic defensive moves. Basic materials are also up because gold rallied immediately off of that news. But we've seen stocks be in this consolidation, drift sideways pattern. We had some pretty constructive trade yesterday, getting above some key technical levels in the major indexes. The one index that really showed market improvement over the last week was the Russell 2000. That achieved and got above a really key level in the 1160 to 65 level, a level that has been battling since the August sell-off to get back above. It got back above there yesterday. It needed to stay back above there. Of course, it has traded down below. So given that we're hovering around these key levels in all the major indexes, I just really see us going sideways. Even if the Brexit vote turns out positive, that the UK does stay inside of the European Union, we'll go sideways. Now, if the referendum vote goes negative, we'll see us drop well below those levels, I'm sure, because that will send a bit of panic through the markets, just the unknown that we can't consider with the UK leaving the EU, what would happen from a global economic perspective.
Well, since you're mentioning levels, I want to ask you about the S&P 500, because while we're drifting, the S&P 500 is not that far away from its old record high. Can stocks actually quietly drift back there, do you think?
We could grind higher. The U.S. equity markets, given what we've seen around the globe, there's clearly a deflationary pulse that's been beating inside of the European Union for a while. China is still not out of the woods. Australia has been doing well because commodities have rallied back. We've got take your pick in Latin America. There's, the mess du jour going on down there. So the situation globally is not great. So the U.S. equity market becomes the best house in a bad neighborhood, so to speak. People search for yield, they search for quality, they search for defensive plays, and that's what you're seeing with equities. But it's not enough to take us to all-time highs. That's not the catalyst that will get us there. There needs to be increased innovation. There needs to be back to 3% growth. We need to have blowout employment, those sorts of things, increased productivity, different types of rules and regulations which will allow companies to expand and hire. And we're just not going to have that right now. That's one of the main tenets underneath my thesis, that we will just go sideways for a while.
All right, sounds like a tough few weeks. Keith, we're glad you spent some time with us. Thanks.
My pleasure.